What's going on, guys? Resilient Trading Group here, coming at you with another video. In today's video is going to be a bit of a different one. It is a behind the scenes into how we run as a business, how we place trades, enter the market, stop loss, take profit, and how we generally run as a FX business. So obviously our main focus as a business is the FX market, not cryptos and not stocks, mainly the FX. This is something we've been mastering for the last 4 to 7 years, very good at. So we do have a Telegram chat, which we got a free one and a premium one. The premium one, we're currently on 571 pips for the month, and our free chat that anyone can join, you don't have to pay for, and you get all of our free trades. We're currently up about 44 pips for this month, and this is one of the trades that we actually entered in for everyone in our Telegrams who's a part of our community, and it's against the euro and Australian dollar. So I'm going to be going through how we place our trades, how we like to enter the market, and how we'll any trade we like to look on the monthly time frame and just have a gauge as to where the market is. Now on the euro versus Australian dollar, it's actually at the highest point it's been in 12 years. Now this was back in 2009, currently 2020, so that's 12 years, and it reached 1.9624. Since then it's had this huge wick and now starting to actually shoot back down through this uptrend here. It is an overall uptrend, but so now on the weekly we can see it was in a nice little uptrend for a couple months. Had this huge breakout back in the beginning of March, and ever since the back end of March has actually been shooting down. So we can now start to see a reversal. The back end of this reversal, I started to see that there's hardly any bullish movements, and it was all very bearish. Markets have been bearish since the 19th, and only 4-5 candles has been bullish. So I'm starting to see a clear indication of a swing trade for this pair to go short, but also to scalp it. So now we're here in a 4-hour time frame. This is the key time frame for anyone to actually be analysing the market. Swing trading, day trading, or scalping, the 4-hour time frame is going to be your best friend. Now, having a look at it, we got the highest point in 12 years. It's shot down, and now it's trading in this downtrend. It had a false breakout here, which means markets went down to the support, broke the actual trend, but very quickly got pushed back down, and now trading back in the trend, respecting it. But along these lines here, the 1.7872 level is key support, and we got resistance, and we got some more resistance along here, which was support. But more frequently, we have these little breakouts, these little support lines here. Now I like to highlight these in a rectangle just because it shows it a bit more clear. Every time it breaks these little boundaries of support, it always has a big bearish movement. So now we're here in the 1 hour time frame, you'll be able to understand what I'm talking about. We have these lines of support, it goes up to the trend line, respects it, and then shoots back down, and that's the trade we're currently in. After this big momentum of break of the support, it created a new line of support, tried to go back up to trend line, it didn't manage to, which is fine. It broke it again, and now it's back on the support. So what I like to do is I like to have a little copy and paste of one of the lines of support. I then draw it along here. So I now know that this is the line of support it needs to break in order for it to do one of these big momentum moves. So this is a pip range of 140, and also this one here is actually a little bit more. It's around about 170 pips. So now I know markets have had a big push down, gone to support. It's now in a mini trend line, which has been respected 1, 2, 3, 4, 5, 6, 7, 8 times, and pushed back down. I thought I'd get an entry on the top of the actual trend line, which is here on the 17244 level, which was our entry. A stop loss of only 57 pips at 1730, just above these resistance, and it would also mean it'd have to break the trend line a lot. But we're scalping this, but in the premium chat we're looking for it to actually swing for around about 120 pips. Now as we can see, each time it breaks the support it drops 141, 171, but we're in a scalp at the minute, at the top of the trend line, just down to the bottom end of these wicks here, these candles here, for only 60 pips, which is a reasonable amount. This is a day trade or a scalp, however you want to look at it. We would say this is a day trade. But if we was actually to look at this as we was for the rest of them, we'd actually be looking at a very good risk to reward. Now this is in the premium chat. If you guys do want to join the premium chat, then message us on our Telegram or Instagram, etc., and we can get you joined. It is only £39 for a month for 6 months for £65, which is very good. And if I actually use the short tool, there we go, and do it for 171, as you can see, it's be a risk to reward of a 1 to 3, 1 to 2.8. And these are the trades we like to enter. We just follow the markets. There's no point going against the market, because then you're just adding more risk to yourself, and there's a lot of risk in FX for one, so you need to minimize that. And one of the ways we do that is by following the market and just following it in its simplest form. We see this happen time and time again, so why don't we just do it now? And you need to wait for the right moments to be doing it. Didn't want to do it too soon because that does add risk and it could just reverse and go back up. So we waited 2 confirmations for it to do it, with a rejection of the trend line and then entry on the trend line, stop loss above the 2 previous candles, and we're in the trade, and we only risk about 1 to 1.5% of our overall account. So you need to implement good risk strategy along with a good trading setup as shown here, and then you enter. And that's how we run as a company. We don't like to add risk. All we're doing is following the markets, getting the best entries, the best sniper entries, really breaking it in the smaller time frames, not just looking at larger time frames, really picking the markets apart, really looking at what's coming out. I know Tuesday that fully Australian dollar, that interest rate decision's coming out. I know is at 0.25% at the moment, and I know that the Reserve Bank of Australia are looking to hold it at 0.25%, and along with that, I know their trade balance is coming out Tuesday. I think their trade balance was in the regions of 500 million, 5 to 10 million, and it's now going to be 436 million. Obviously, because of the global pandemic, they're not going to be importing and exporting as much. Therefore, it's going to be decreasing, so it will have a negative impact on the Australian dollar. But that is how we usually run as a company, guys. I hope this has been a bit insightful of how we like to run behind the scenes, how we like to enter our trades, place our take profits, place our stop losses, and how we run. So if you want to see more videos like this, then make sure you hit the like button, subscribe if you're new around here, and check out all our socials in the description below. Thank you for watching.